Do I look okay on my side?
Okay. Hey, Kyle, how are you doing today?
Doing well, Karie. How about yourself?
I'm doing great and happy Friday.
Happy Friday to you as well.
Yeah. What plans do you have this weekend?
This weekend, getting together with my son, bringing him down, having some pool time here at the house, and then we're hanging here for a couple of days, and then we are taking off on vacation for a week, the
Very cool.
family.
Where are you going for your vacation?
We've got a family place down at Myrtle, so we're going down there, see my
Okay.
parents, and let him get some grandparents time.
Excellent. That sounds like so much fun. My goal is not
Absolutely.
that much this weekend, so that's the goal.
Uh-huh.
Because I've been working a lot. I am so excited that you are here with us today. This is, by the way, I didn't get to introduce Kyle. This is Kyle Moody. He's with American IRA. We met a few months ago, actually quite a while ago at this point, at an investors expo, and I was so excited to meet Kyle. He handles so many amazing retirement products, and the big product that I was so excited and interested in was about solo IRAs. So he is here today with me to chat a little bit about solo IRAs, how they can benefit you as a real estate agent, an investor, or just in general, how they can benefit you. So Kyle, can you tell us a little bit about yourself?
Yeah, so again, my name is Kyle Moody. I'm with American IRA. I am the business development manager with the company. I've been there for just over 7 years. Prior to that, I ran a property management company. I was the broker in charge there, and that spawned off my experience in the real estate world. And then spent some time with the financial services industry in Washington, D.C., and that was after receiving a master's degree in college, which seems like a really long time ago now. But so that's kind of my track, that what has gotten me here after getting into the private field in real estate and into uh, uh, really property management, and seeing investors and how they were utilizing their investment properties. That's actually how I got to know about American IRA. The CEO was one of our clients, and then other clients were folks that actually had their IRAs were the clients, so to speak. And we'll explain how that looks and how that works. And
Yeah.
it's allowed me to get into different groups and different meetings, and which is what led me to you in the Triad vendor show back in May.
Yeah, I'm so excited that you are here. We have been trying to plan this and put this together for a little while. So
Right.
I definitely want to hop in so that we can find out as much as we can about solo IRAs and how they can benefit you. And, like I said, as just a regular person, real estate agent, investor,
Mhm.
all the way around it. So I guess
Yeah.
one of my first questions is, can anyone have a solo IRA?
Well, and it's a great question to lead off with. One thing I'll tell you, there's a couple of topics that we talked about when we first met, and these accounts can really cover the spectrum of the different folks.
Mhm.
Really quickly, there are things called self-directed IRAs. And by the way, everything that we're going to talk about today is going to be all on the self-directed end. It's also
Okay.
important to note that I'm not a fiduciary, so I can't ever offer any tax, legal, or financial advice, suggestions, or opinions. Rather, what I love to do, what I get to do, and especially in this case, is educate and give a lot of information, and then be able to, answer people's questions when we're one-on-one, talk about their scenario, and really help them see what it's going to look like. So, with that, self-directed retirement accounts can be seen in a myriad of different account types. Number one is a self-directed IRA or a self-directed Roth. Those are the ones that anything that someone might know about their traditional IRA that they may already have, or their Roth account that they might already have at a Vanguard or a Schwab or a Fidelity or something like that, they're able to actually diversify out of those portfolios and have a self-directed IRA. So everything you know about those type of retirement accounts are the exact same when you're self-directed, except for the fact that instead of custodying stocks, bonds, and mutual funds like those
Mhm.
companies do, our clients are solely investing in real estate. They're being hard money lenders, getting into syndications, precious metals, and things like that. The
Mhm.
second account out there that is really going to target more of your agents or business owners is the solo 401k. Still self-directed, but that is one that is a little bit more limited in scope of who is eligible for it.
Okay.
That is going to be small business owners or anyone who has their own company. And this is the biggie, with no full-time employees. Okay. A spouse can be a full-time employee with the company, but it's anyone with their own company, no full-time employees, and then to be able to make the contributions, those wages are taxable income that they're able to do that. So in full, pretty much anybody, with some slight exceptions, can have a self-directed account.
Okay.
The majority of the folks are going to be traditional IRAs and Roths,
Uh,
where the more limited are going to be the solo 401ks.
okay. And so is that the only eligibility is the full-time employee, or is there any other requirements?
For the solo 401k, which is the one we're going to talk about the most today,
Mhm.
the eligibilities, the two boxes that must be checked, they have to have their own company, and there can't be any full-time W-2 employees.
Okay, okay, that's excellent. I was so excited to hear about those when we met. I was like,
Yeah.
this is so amazing. So I definitely
Hmm.
was so excited to set this up and chat with you further about it.
Absolutely. Yeah, it's
Yeah,
my pleasure as well.
yeah, I'm super excited. Okay, so one other question I have is a
Mhm.
solo 401ks. How are they just? I think you kind of went over it, but a little bit more details. How are they different than other retirement accounts?
Yeah, absolutely. So there's three things that can set a solo 401k aside from your more self-directed IRAs. And what I want you to think about, first of all, is yes, you're going to hear me say self-directed a lot because it is self-directed. We are not advising on anything. But again, just remember everything that you might know about your own traditional or Roth IRAs. And then also, if you currently have maybe a 9 to 5 job, or if you had a 9 to 5 job where they offered a 401k plan,
Mhm.
it's it reflects a lot the same, except in this case with a solo 401k, you are not only the employee, but you are also the employer. And
Mhm.
that's what makes this the most powerful retirement vehicle really in the history of what the IRS has ever offered. Okay. And all of this has come about since ERISA's started in 1974. So the three things that can set a solo 401k apart from any of the IRAs: number one, are the much higher contribution limits.
Mhm. Yeah,
Anybody who's contributing right now knows that in their IRA, at a max, anyone 49 and under can put away $7,000 a year in a Roth or a traditional. And if they're 50 or older, they've got that $1,000 catch up to put 8,000 away.
yeah.
Rather, and this is the big one. This is where the eyebrows usually go up with a solo 401k max contributions. Now, as long as the math works out, and we'll get to the math later, but as
Mhm.
long as the math works out, anyone 49 and under can put away up to $69,000 away in a solo 401k, and anyone 50 and older has that $7,500 catch up, which allows them to put away upwards of $76,500.
And that's
So
crazy.
you've got
Yeah,
it really is almost
yeah.
10 times the amount. So that's the first thing, is the much higher contribution limits. The
Mhm.
second thing that sets the Solo K apart is that it has a built-in Roth component to it on the employee contribution bucket. Okay, so when you're making your contributions into your solo 401k, you're doing it two different ways. You're
Mhm.
coming in as the employee, the single person, and depending on your age, that is the side that allows you to put in 23,000, anyone 49 and under, or 30,500 for 50 and older. Those funds can be put in either as traditional dollars or Roth dollars. Now, I'm only going to give you the information on that of what is possible. But
Yeah.
what it's going to look like, what you need to do, that is going to be between you and your CPA. Okay. The background, and somebody can do the math on the upfront number that I gave you earlier, but that um the corporate match or the employer contribution coming in can only be in traditional dollars,
Okay.
and the match is going to be 20% for anyone who is an LLC, sole proprietor.
Okay.
That might be a lot of your agents. And
Yeah.
but for anyone who is set up as an S corp, they're going to be able to put away 25% of their gross.
Oh,
Okay,
wow.
so you got much higher contribution limits.
Mhm.
You've got the built-in Roth provision on the employee contribution bucket, and the third thing that sets the Solo K apart, it is the only account out there that will allow you to do this. It's just like somebody who is working the 9 to 5 and has the 401k plan at work. It's the only retirement account that allows you to loan to yourself for any reason. An IRA or Roth, you cannot take loans with those to yourself, but with a solo 401k, you can loan to yourself for up to half of the account's value or $50,000, whichever is less. And when you really think about it, and we might even be able to do this in separate presentations or Q&As, is that people can actually go in on real estate deals and partner with themselves from money they loan to themselves from their solo 401k. So those higher level transactions, it really is it lends to a lot of creativity of how you can work your transaction for your investment.
Yeah, yeah, and that was like what I was like most that was like my aha when we met up because I was like, when we do flips, this is amazing. You know,
Yeah,
A, to be able to pull out the money, but then also
sure.
to shelter the cash. That was just like so it was so exciting when we
Hmm.
chatted, and I was just so
Right.
excited about hearing the limits too. Um,
Yeah.
Another question I have is am I allowed to invest this in the same asset class with solo Ks? What's that?
Okay, yeah, great question. So I get this one a lot. Someone may be calling me only for, let's say, a Roth, and that's all they've heard is that, open up a Roth, you've got
Yeah,
to do this. It's tax-free money, invest with the Roth, and then whatever profits or proceeds come back in, those are also tax-free as well. So they get locked in on that. Well, then after talking with them, now I'm not going to upsell somebody on this, but when they start thinking, hey, I've also been told about the solo 401k, but I don't know if I want to, because I really want to invest in real estate with my Roth account. And,
yeah,
then for me, I'm not advising them, but I can say, well, by the way, you can actually invest in all of the asset classes with the solo 401k that you can with the with your Roth, your traditional. And so what I'll say for anybody who is looking to say, hey, I've got my own company, and by the way, I've also got my HSA where I am. I've got a high deductible healthcare plan. Well, we have those as well, so you can actually self-direct your HSA if you've got your own business and you've got your solo 401k. Oh, and by the way, if you have small kids and you're planning for college and you're using a Coverdell,
mhm,
well, you can self-direct the Coverdell as well. And my point for just telling you about those kind of bolt-on accounts
yeah.
is it doesn't matter the account vehicle you've got, they can all invest in the exact same assets across
That's
the
so
board.
cool. That is so cool. And
It really is.
one, I think just to break it down for like maybe people who are like who are on here, when we're talking about asset classes, I mean,
Mhm.
can we take it just layman's terms or, to the
Oh,
beginner?
sure. Yeah.
Yeah.
Yeah. So, when I talk about asset classes, you think about a true asset that you've
Okay.
invested in. Real estate. Another asset class would be you can be a hard money lender. This one's huge with real estate brokers and a lot of investors. It's the second highest thing that folks are going to use their accounts for is being a hard money lender, and we'll talk more about that of the
Yeah.
whys later.
Yeah.
Investing in precious metals, getting into syndications,
Mhm.
joint ventures. Uh, Fix and in real estate kind of branching out there because it's so multifaceted.
Yeah.
Fix and flips, tax liens for folks that are in South Carolina, Georgia, Florida, foreclosures, the race to the courthouse steps, how you can actually use these accounts for those wholesaling deals.
Mhm.
All of that is going to be set up as a real estate deal or a private loan, getting into promissory notes
Okay.
and things like that. Yeah.
Okay, that is so exciting. That's one of the, when we were chatting at first, I was so excited to hear that because
Mhm.
my head just like started going. And I was like, oh, this is
There's
so,
a lot to it. That's
yeah,
a lot.
there's so much. I mean, you could just go on and on and on. And that's why I was so excited when I was like, will you meet with me? Will you do a live with me? Because
Yeah.
this is so exciting. And I'm so excited about this, but does everyone know about this kind of the solo 401k? I mean, because for me, I was super excited because I understand all the other traditional retirement
Mhm.
avenues that you're, invest in, but this was super, super exciting. Is there any do's and don'ts, do you think, with self-directed retirement accounts?
Well, it's interesting that you asked me that question because what I was getting ready to tell you
Yeah,
is that, when you were talking about, hey, this sounds really cool, all these, your head's already spinning with all the different things that you
yeah,
would like to get into with it. And yes, what I tell folks is that it's not so much what all the IRS tells you that you can do
yeah,
with any of your self-directed accounts,
yeah,
not just the solo K or a traditional IRA. It's the handful of things that you can't do. Okay.
mhm,
Um, so for example, you'll hear when I'm on the phone with folks or maybe some things when they've been researching, the questions that I'm going to get are, hey, I've heard about prohibited transactions and I've heard about disqualified parties. It's really simple. And I actually have all this information that I can send out to all your folks as
yeah,
well. Everybody is more than welcome to have one of the booklets that I give out in person. You actually, I believe I gave you one, you and
yeah,
Chad one. But disqualified parties to someone's self-directed retirement account, the
okay,
types of people that you can't do business with, you can't loan to yourself, you can't sell yourself your own piece of real estate. So any business or any business entity that you own, your spouse, anyone in your upline to infinity, and anyone in your downline and their spouses. Okay, those are disqualified parties that you just can't directly do business with when using your self-directed retirement account. Now, there's caveats to that. Um, so when I tell folks, well, by the way, you can partner with yourself on a real estate deal, and they're like, wait a minute, you just told me
yeah,
that I'm disqualified. I'm like, yeah, but there are ways to do it, and it's not a sneaky way to do it. It's, for example, at the time of acquisition and only at the time of acquisition, could Karie use her retirement account to partner with Karie, the individual, in your savings account to acquire a piece of property. Okay. Now, just because your personal funds are in there, doesn't mean that you can go mow the lawn or paint the walls or things like that. You still have to adhere to the fact that you can't touch that property.
yeah,
It's still arm's length. You've always got to contract everything out, but at least you were able to come in on the financier part to procure the property. Okay.
yeah,
Other things, prohibited transactions. Uh, there's things like that could trigger prohibited transactions.
mhm,
Somebody buying a property and then moving into it. Someone loaning to one of their children. Um, maybe trying to find a way to get around a deal, selling a property to somebody who's not disqualified just so that their retirement account can come in and purchase it after that's a step transaction, and the IRS frowns on that. So certain things can be prohibited transactions. We in the industry are not permitted to really say, you can't do that. That's a prohibited trend. I'm not going to dig deep to find, peel back layers of an onion to figure out if something is going to be prohibited. There
yeah,
are things that can look prohibited and can be completely fine, and vice versa.
yeah,
But if there are just the obvious red flags that somebody says, hey, look, get ready to buy this vacation house. My family and I are going to go down and use it a couple weeks of the year. Well, okay, you can definitely do the vacation house part. You can't ever even spend one night in that property. So
yeah.
I'll explain those things. And those are some of the do's and don'ts.
Okay, okay. And let's say you have a company, so you maybe have an LLC or an S corp, but then also
Uh-huh.
you're a W-2. Can you
Oh, right. Yeah,
still invest in the solo 401ks?
absolutely. You're getting a lot of the questions I historically get. That's really cool. You're all over it. Um, so the answer is yes. You
Okay,
can have your full-time job and actually have a 401k, excuse me, a 401k at that job.
okay,
And um, you've got your side hustle going on
yeah,
where you're starting to make some money.
Mhm.
Where you see this a lot is maybe people in municipalities. Firemen always have maybe some type of construction thing on the
Yeah.
side. Police officers, real estate brokers. They got into maybe being a professional real estate agent because of their knowledge and history of of their investing in building, developing, and something like that.
Yeah.
The important thing to know is that with your 401k at work and your solo 401k that you have on the side hustle,
Mhm.
you need to keep those dollars separate. Okay. If you are maxing out your employee contribution
Mhm.
at the 9 to 5, it doesn't matter how much money you are making on on your side game.
Mhm.
You cannot put any of your contribution funds into your employee bucket for your solo 401k. All right. So in other words,
Okay.
that 23,000
Yeah.
or the 30,500, it has to be bridged
Okay.
to where if you only put away, 19 at the office, well, then on the side hustle, you've got the 4,000 that you can put away into your employee bucket if you're 49 and under. Okay. Now,
Mhm.
again, these are things that you are going to get totally blessed by your CPA. I'm just
Yeah.
giving you the information.
Yeah.
If you've got, if you have maxed out your employee contribution at the 9 to 5,
Okay.
but your side hustle is also generating income, you can still come in with the company match, however. Okay.
Okay.
Again, your tax professional is going to walk you through that,
Yeah.
but that is the possibility as well.
Okay. Okay. So, um, I'm thinking one of the things that I just kept thinking about is that I help a lot of clients that are investors and or beginning investors.
Mhm,
Could you just give like, and some of them do have 9 to 5s.
mhm.
Let's say they buy a house and flip it, but then they've got their 9 to 5. What is it, just to break it down real easy, what would that look like for one of these folks to maybe come in, I help them buy a house, they flip it, they make 50,000 on that,
Mhm.
then they've got their 9 to 5 and they've got their W-2, and then their 401k there.
I see where you're going with
Yeah,
this. You're
if you
like,
were
they've already
going
made
just to
this
break
much
it
money.
down really simple, because it gets.
Yeah. So, right. So, and this is actually a good thing for everybody to note, because I'll get that question. Wait a minute. You just said that even if I totally cap this out at 69,000 or
Yeah.
76.5, and then I've got, money that I'm putting away at work, but I just made a $50,000 profit on something. How in the world am I supposed to put that in there? I think that's what you're saying,
Yeah.
because I've got too much money now. Holy
Yes.
cow, I'm facing taxation.
Yes. That's
Great
exactly.
question.
Yeah.
There are three ways that monies are able to be put into any of the retirement accounts. Number one is a rollover from an old 401k, 403b, 457, TSP, you name it, it can all come into an account. Okay. You can also, if you don't have the old 401ks, but let's say you have an IRA or a Roth, and you're looking to go from IRA to IRA, traditional to traditional,
Uh-huh.
Roth to Roth,
Yeah.
you are still able to do transfers. Okay, so you've got contributions, or excuse me, you've got rollovers, you've got transfers, and then you have your contributions of whatever you're on your scale that you can put away. Okay, so those are the three ways to put the money into the account. There's no cap on rollovers.
Okay.
There's no ceiling on transfers.
Okay.
You're only capped or face the ceiling on your contributions, both in
Okay.
the solo case, traditionals, whatever.
Yeah.
There is also no ceiling on the profit that can come in.
Oh,
So
okay.
even on a smaller scale, you might have an investor out there who, quite honestly, let's be real about the economy right now. Investors, if they're holding, funds close to vest, but then they find out, wait a minute, I can unlock this and now start investing like I used to do when I was freely using my money that I'm now holding tight.
Mhm.
I can use an old 401k and do this. They've rolled all that money in, they've made their contribution, and
Mhm.
then they do a fix and flip that they've been like, wait a minute, I just maxed this out at 8 grand because I'm 57 years old, but I just made a $40,000 profit,
Yeah,
for your example there. What am I going to do with that?
yeah,
That's a profit that came from the asset that sat in the account, and and not only can they put that back in the account,
yeah,
if they purchase that retirement account 100%, excuse me, if they purchased that piece of real estate 100% from the retirement account,
yeah.
it's not can they must put every single dime of that right back into the retirement account.
Okay.
The
That
great
was
thing about it is, yeah, the great thing about that is that if it comes in, and they use a traditional IRA, it's
Mhm.
still gonna be a tax-free for that year because it's tax deferred being a traditional. If they did that in a Roth, they're never gonna pay a dime in taxes on that.
Yeah, that was my big question, just because I know
Yeah.
a lot of people would be like, "Wait a minute, so how does this work?" Just
Mhm.
because it gets kinda complicated.
Sure.
Another question I had is there a difference in cost, between, like, let's say somebody comes and they, come with to America IRA and then versus
Mhm.
the other companies, between, IRAs and solo 401(k)s?
Sure, yeah. Great question. And I'll put on my sales hat here for just a second
Yeah,
to explain American IRA and me. Um, and then I'm also going to give you some information on that.
yeah,
I'm actually going to give some discounts for
okay,
anybody that's watching this, and we'll give them that teaser in just a little bit. But solo 401ks, they're a different animal, so it is a little bit more expensive to set up one of those. An
okay,
IRA with our company is a $50 one-time setup fee. You don't have to like bring the check, right there when you open up the account, and I can walk people through that. Those funds can come from the undirected cash in the account, and it's very streamlined. Once the money comes in, you've got money sitting in your account, but it's a $50 one-time setup fee.
mhm,
For the solo 401ks, it's $150
okay,
setup fee for those. Okay. There's a lot that goes into that.
mhm,
There's minimum cash requirements that we have, but people say, wait, that's it? Because remember, it's self-directed.
yeah,
You're doing all the work. We're just the record keepers. But for an IRA, traditional HSA, Coverdell, um, the Roth, $750 minimum cash balance that you're going to
okay,
keep in the account at all times.
mhm.
For the solo 401k, it's doubled. It's $1,500 that needs to remain in the account at all times.
Okay, okay,
Mhm,
okay, well, that's excellent.
mhm.
You know, that's not that bad. So, I mean,
Well, and then when you true, and then when you really find out what it is, and I'll just tell folks really quick because the one question we're, on every, yeah, but how much is this going to cost me? Traditionally, at the Merrill Lynch's, the Morgan Stanleys, you have someone there that's working on the account's behalf, where now you're working on the account's behalf.
yeah,
Industry wide, there are companies like ours that are going to still want to charge per asset. They call it an AUM, or an asset under management fee.
uh-huh,
They may be tracking what your account is doing, and they're going to watch that. And as it keeps going up in certain echelons, they're going to escalate your annual fees. Cool
uh-huh.
thing about American IRA is this: for a basic IRA account, it's $285 a year.
Oh,
You're going to pay $95 per transaction. But if you see yourself doing multiple transactions a year,
mhm,
you can opt for the unlimited for 450 a year. There's some nominal hard costs in that, but other than that, you can do as many transactions as you want for 450. You get to work with specific transaction specialists in our office. Okay, so you know who you're going to be speaking with at that office. There are no phone trees,
mhm,
no call centers. Everybody's right there.
yeah,
Um, for the solo 401ks, again, big, different animal. It's 280, excuse me, it's 585 and 750 respectively. That $300 difference on either account is only because of the plan docs that we have put together, since it is that 401k type of platform. So
yeah,
that's that $300 difference, and we're always watching for the updates and things like that.
that's
No fees on cash only IRAs.
mhm,
And the greatest thing is that no matter how much your account grows in value for the work that you did, not us.
yeah,
Remember, we're just the record keeper.
Yeah.
So for all the work that you did, no matter how much your account grows in value, we don't penalize our clients by increasing their annual fee year after year. And
Uh,
that's a great thing.
yeah, it is. It really is. I mean, the big thing about this is like when you get into this, you start getting into, let's say you use it for investments like we
Mhm,
would, is that, when you're looking at some of those fees, you're like, okay, the taxes are insane when you flip.
mhm.
You're
Yeah.
losing 20% at least. When you put in like money that your profit. So really
Mhm.
the fees to me are minor. I mean, in my opinion, being able to shelter all this cash and be able to use it in different fashions, and have it accessible, which is amazing.
Well,
So
true. And for folks who still are just now learning about this, I don't want them to miss the lead right there when you were just talking about that, because they'll think, oh gosh, yeah, I forgot about the taxes that I'm going to get hit with on the flip. I get questions a lot on capital gains.
yeah,
Here's one of the keys. It's not your property.
yeah,
You don't own this property. Your retirement account does. And
yes,
because of that, there aren't capital gains.
yes, that was the
There,
big
there, yeah,
thing.
there aren't flip taxes. Yeah.
Yeah, that was the huge thing for me. I was like, oh my gosh, because I paid over 20% last year for a flip. I think it was last
Hmm.
year. I can't remember. It was insanity.
Yeah.
So like learning about all this, I was just like, oh no, from this point on, this is what needs to happen for sure. For
Right.
sure.
Hmm.
Well, I know we don't have that much more time, but I'm gonna leave it up to you. What else do you think people need to know? And we would love it if you could come back on again and explain
Oh,
more since we're
absolutely.
running out of time. But what else do you want to share with us?
One of the things that I'll say is that self-directed accounts aren't for everyone.
Mhm.
Um, it, it does require a little bit more, boots on the ground. You got to stay on top of it. This is not going to be an account where, oh, I just want to give it to a provider or an advisor, have them make all my decisions for me, and I'll check in on my annual, meeting with them, or I'll look in on it every couple of years. It doesn't work that way.
Mhm.
Self-directed is self-directed, but it is the ability for someone to take their knowledge and their expertise and have the freedom and flexibility to invest in those assets that might make more sense to them than, you know, stocks, bonds, and mutual funds. So that's where it is a benefit. But knowing that that it's gonna take a little bit more work on your part.
Mhm.
The other thing is this, is that there are some folks that will get into it for the real estate side of it, and this is actually really cool. They'll get into it for the real estate aspect of it, but a real estate broker can't broker their own deals
Yeah.
if they're using their self-directed funds. Try as they might, or they don't want to, give that power up to another broker. We've all been there, right?
Yeah.
Well, what's interesting is those folks have actually ended up being some of the best hard money lenders out of an account. They'll just say, you know what, heck with it. I will just keep doing my real estate stuff. That's my milk and gas money. I know I can do that. Well, then they're going to inevitably meet up with some investors who want to be like them, but they may not have the capital to do it. Well,
Yeah.
these people end up being some of the best hard money lenders out of their account. One of my good friends is a big podcaster in the Asheville area. Really came from the ground up on his real estate stuff. He wants to keep his hands dirty on his real estate, so he knows he can't use his self-directed IRA for that. He's been one of the best lenders, and he'll have multiple loans going on at one time. As he's going on his day to day, those notes are paying in every month to his account. So
Yeah.
I tell folks, don't ever paint yourself into a corner on one asset class.
Mhm.
You may not want to try every single one of them, but find your niche. Think about what you could really capitalize on, and then let's have a discussion on how that's really going to work. And let me help you streamline your opening and use of your account, and then hopefully you're really going to enjoy investing this way.
Yeah. Yeah. That's awesome. It really is. This was so exciting when I
Mhm.
learned about this with you, and I was so excited to chat with you more and learn more about it.
Absolutely.
And I am so excited that you came on here with us today. And if anybody wants Kyle's information, it will for sure be below, and definitely reach out to me. I'll have all his information below in the chat, as well as you can always get it from me. But it's Kyle Moody with America IRA, and his email is actually kyle@americanira.com, just in case
Mhm.
anyone.
And you can give them my direct phone number
Okay,
that
what
you
is
have,
that? Yeah.
which is the 828
Okay.
412
Okay.
8123. And I'll tell you all that comes, you can reach me no matter where I am. I don't know if that's a good or a bad thing
Yeah.
sometimes, but that's going to get you directly to me.
Okay.
Uh, my goal has always been, as I said, I love to educate and inform, and love to be able to help all your folks. And because of that, here's one of the things I was going to tell you about. I'm
Yeah.
going to do some discounting here.
Okay.
Um, is that for anybody that's listening to this through the rest of July?
Uh-huh.
If anybody wants to do an IRA platform, I'll waive those $50 setup fees
Mhm.
on that.
Thank you. Yeah.
And then I tell you what we'll also do, even though they're a little bit more pricey, and I didn't even ask about this one yet,
Yeah.
but we're going to do it anyway. We'll waive solo 401k setups through the end of July.
Oh, wow.
And then uh, anytime up until Labor Day, let's say, we'll do $100 off on those setups. Okay. For now, it's important for folks to, they need to call me direct. They can always go to our website, but if they sign up for something, somebody else might be contacting them. So they want to call me directly. If they ever do speak to somebody else different, they want to make sure to say, "Hey, I need to speak to Kyle. I heard him on the presentation with Karie Carico, and I'd really like to talk more about this, and I'm going to make sure that they get that benefit. And anything throughout the rest of the year, it'll just be the $50 off on that.
Okay.
Solo 401ks need to be opened no later than New Year's Eve, and I
Okay.
always tell folks, don't wait till then.
Okay. Well, I so much appreciate you coming on, and we hope you will come on again with us. And because it's so exciting, maybe we can talk about something else or further talk about solo 401ks, or,
Mhm.
there's just so many things we can chat about. But again, we thank you so much for coming on. And
Absolutely.
guys, again, all his information will be in the chat below. Please feel free to give us any questions you have as well, and we will get them answered. And Kyle will reach out to you guys directly with a lot of those questions. Thank you
I'm
guys again.
here.
Okay.
Thank you as well, and I'm here anytime you need me.
Thank you so much. Okay.
All right. Have a great weekend.
You too.